This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to TF Metals Report podcast highlights for the week of January 31st through February the 4th, 2022. We knew it was going to be a busy week, concluding with the latest jobs report. We certainly had no shortage of stuff to talk about through the week. And these podcast summaries are waited for you to kind of get a glimpse of how things roll at TF Metals Report. Some of the stuff we talk about on a daily basis. These are just snippets of our daily podcasts, which usually run about 20 minutes or so, bringing you up to speed, up to date on everything that took place during the day. Monday, January 31st was the last day of the month, so it was time to look at the monthly charts. And one of the monthly charts we reviewed was the long-term 20-year monthly chart of COMEX Gold. And one of the most bullish chart patterns you are ever going to see, a perfect cup handle bull flag ready to break out. And that was one of the topics we covered on Monday, January 31st. And this remains the most bullish of charts that I can give you in terms of gold. I mean, you've got here basically a 10-year cup, okay? Followed by a what? Year and a half of a handle? Not quite, a little more, coming up on 2 years of a handle. And the handle actually is kind of keying off this 1800 where we are right now. And it's more of like a pennant. And if you look at this, you'd say, God, we can only maybe fit 2 more monthly candles in that pennant. That would get us what, through March? The first Fed rate hike? Who knows what's going to happen in the next 60 days? And again, the advantage of something like this long of a consolidation and flag after a 10-year bull is it's very obvious to everybody once we break out. Because we'll be printing this chart. Everybody will be. Oh, look, gold's now above 1900 again. Oh, it's breaking. Oh, it's above 1920. Oh, you better get going. Here we go. Now it's 1960. High it's been in a year. And the thing just builds on itself. And then it makes a new all-time high. And then it goes another 10% beyond that. But this is still a very bullish chart. And I want you to make sure you consider that because, again, all the usual dumbasses are out there saying, oh, gold's going to 1400. Right. Just like the Fed's going to hike 7 times this year. On Tuesday, February the 1st, we took a good look at the dollar index. It had rallied sharply after the FOMC last week, but now it's beginning to fall back. Was this the start of a trend? Was that a fake out, a head fake? Well, actually, we didn't know the dollar would end up falling almost every single day this week, but it certainly had our attention as the month began on Tuesday, February the 1st. All right, here's your dollar chart. Again, getting very close. What is that? 96.11 on the cash dollar, the spot dollar, if you will, because there's dollar futures too, you know. But we always look at the dollar, spot dollar index. So we're 15 cents above that. Now, remember when we fell back into the channel about, a month ago? We dabbled with getting back above, until finally tried to hold the 50-day, and then once it took out the 50-day, then we plunged all the way to 94.65. So we'll watch. This is going to be the key level to watch the rest of the week. I mean, we've already almost completely erased the gains last Wednesday and Thursday after Powell. We were down there around 96 when Powell started flapping his gums. Where was gold when that happened? Like 1830 or something? And silver was considerably higher still. I mean, we're down a full point, and gold's only up $15 this week, and silver's only up 34 cents. Yeah, we got spooked everybody out, especially in gold, as Feb went off the board. But this will be interesting to watch, obviously, the rest of the week, and that will either help or hurt our cause. One of the big drivers of Fed policy this year will be the stock market. Back in 2018, the stock market fell 20% in the fourth quarter, and that eventually led to the Powell pivot. And it turned to lower interest rates when everybody was expecting higher interest rates in 2019. Same kind of pattern is playing out here in the first quarter of 2022. So we watched the stock market pretty closely. Discussion of the chart of the S&P was one of the things we discussed Wednesday, February the 2nd. Okay, so just a handful of charts. Stock market's bouncing back up again today. A couple of things to note here. You remember a couple of days ago we talked about the similarity of the current chart versus the chart in the fourth quarter of 2018 that eventually led to the Powell pivot. Price fell 10% or so, maybe, and then bounced and tried 3 different times to bounce. It failed from about the same level each time. And then once it finally took out support, it fell 10 or 11% in about 10 days. And then you got the Powell pivot back in December of 2018. Okay, well, here you go. We've now got that very clear line of support. I mean, 4,300 on the cash S&P couldn't be more obvious, right? Let's see what happens tomorrow and the rest of this week, because here we come, right up to the 50-day. Will that be resistance, as it sort of was earlier in January, middle part of the month there? Came down, got above it, and then fell sharply. What will happen this time? God knows. Maybe the S&P will just make new all-time highs, get by the end of this month, up near 4,900. Would it surprise you if it did? But at the same time, if the Fed's going to keep talking about rate hikes, then I would imagine it'll roll over after dabbling with the 50-day. Whether it'll come all the way down to 4,300 again or just bounce off the 200-day again or whatever, but I suspect until we get some, not necessarily clarity out of the Fed, but whether the stock market has already, called their bluff, or if the stock market needs to fall more to get to the Powell pivot again, 2022 style, we'll see. But anyway, this bounce off of 4,300 is not surprising. And now we'll just see, again, if just like in that fourth quarter of 2018, the first quarter of 2022 doesn't look almost exactly the same. One of the more worrisome charts we're tracking so far this year is the chart of the ETF with the symbol TIP, the TIP. It's full of Treasury inflation-protected securities, and loosely, I guess, defined, it goes up when real interest rates fall, and it goes down when real interest rates rise. And it's been going down sharply since the first of the year, threatening to break down through an important support level near 125. Something we got to keep an eye on, and it's something we discussed on Thursday, February the 3rd. All right, and then just some charts. Here's that tip chart I was telling you about. This is actually a weekly chart so that you can see we've come down several times since we first got above 125 in July of 2022. You remember July of 2022 or 2020? That was fun. We've bounced off of there, traded below 125 a few times, but never closed below on a weekly basis. We got a shot at it. This would certainly seem to imply that this trend that began back in 2018 is at least for now broken. It may have to reestablish itself back up to the upside, but we need to hold above 125 for the final vestiges, if you will, of that trend. And the week draws to a close on Friday, February the 4th, another BS day, as we call it at TF Metals Report. And why do we call it that? Well, because everything indicated job losses in January, but instead, somehow magically through seasonal adjustments and other modeling, the BLS decided the U.S. economy had added 400,000 jobs. Okay, whatever. Now it appears certain that we're going to get some rate hikes beginning in March, and then the market is even pricing in maybe 4 or 5 of those rate hikes. We'll see how the stock market handles that if they try to do it, but more important to us, gold fell sharply on the news and then sharply recovered. There was an article on Bloomberg a couple of days ago about some big whale, as they called it, buying gold under $1,800. Well, if that's the case, that whale was in there today, that's for sure. Gold's going to finish the week up about $20 and above its 50-week moving average, which on this weekly chart, you can see how important that is. So we're set up for a big, interesting week next. Biggest data point of the week will be the latest update on consumer prices in the U.S. We'll get that on Thursday. You want to keep track of this stuff on a day-to-day basis. There's nothing better than TF Metals Report to help you do that. It's only $15 a month. We'd love to have you join us there. If not, you can keep listening to these podcasts. We'll have another one next week. Thank you for listening, and have a great weekend.